Welcome to Vishal and Company, where Equity Guru's own Vishal Tura, Taku Ndachena, Colin Botrell, and Maddie Grace examine the week's financial events in real terms, bringing the esoteric blur of public market activity into sharp focus. So come in, sit down, put your feet up, and enjoy.
And we're live.
Yay. Okay. Hello. Welcome to this week's edition of Vishal and Company. This week doesn't really need an introduction. We're going to be talking about what the rest of the entire world is talking about. Gamestop, Wall Street, corruption, etc. My personal echo chamber of social media is just like a bunch of artists and all things that are the antithesis to the financial world. So you know it's a big deal when the stock market and charts have infiltrated my personal bubble. All that said, we have our usuals here, Vishal, TK, and Galen, to give their opinions on all that's going on. I'm the resident not finance person to keep all of them in check if they don't make any sense. And that is all. Vishal, it's all yours.
All right, so we're going to get into the Wall Street bet stuff, but let's just take a look at the equity markets. Not a really good day today. As you guys can see here on the daily charts, just 2 days ago, we had a big sell-off on the S&P 500 and on the NASDAQ and on the Dow Jones. Just to put this in perspective, this red candle here took out basically 14 days of price action in 1 day. And as you can see, yesterday we had that pop, which, again, folks, we generally see when patterns break down. We see that retest, and it looked like they were trying to squeeze a lot of people out, and we'll talk about short squeezes in just a bit. And then the S&P right now is selling off, but as I go down to the 4-hour chart here, okay, we are seeing some bidders might have to go to the intraday, and you can see here the S&P is showing signs of some stabilization and some heavy buying as of now. The chart of interest for me, though, and we talked about this last week on Friday, was the Dow Jones, and we were talking about this double top pattern. Basically just looks like an M, right? Which is a reversal pattern. And yeah, you know, that does look like it's triggered and will be triggering. Because this is a reversal pattern, I think we can expect further moves lower in the markets. However, if we can get a close back above 30,700, I would say that we're probably back to a range or maybe even breaking back to the upside. But what I want to see today, by the end of the day, I do want to see if we can get the Dow to close below 30,200, for the S&P to get a daily close below 3,745 here. And then, you know, the NASDAQ, to be honest, is still looking quite decent. I think it maybe smells some trouble when it hits 12,750. So we'll take a look at the closes. I think keep those in mind as we head into next week. I do expect some action over the weekend, and we'll talk about that when we talk about short squeezing, WFB, and Gamestop. Quick look here at the 10-year yield. It is bouncing at 1%. And again, folks, when the 10-year yield is bouncing higher, it does indicate that money is actually leaving the safety of bonds and running into, heading back into the stock market. So basically what we'd want to see is we'd want to see this continue the sell-off, get back below 1, which would indicate more fear, right? So keep an eye out on the 10-year yield. If we do look at the VIX, the volatility index, this is the daily candle. So again, 2 days ago with that initial sell-off, volatility and fear was, you know, making its entrance back into, you know, the trading world here. We haven't seen a big candle like this since, oh man, going back till February of last year, something this size. And today you can sort of see we're sort of all over the place. We, you know, if there was going to be continued sell-off, we'd probably expect this to bounce higher, but we still do have 2 hours of trading left to go. On the gold side, gold is, you know, not really reacting as much in these past 5 days. You can see it's still been holding a range between 1840 and around 1870 here. We just got to wait for that break there. Silver, on the other hand, had had a nice 6% move yesterday. At one point was up 6%. Continued higher today because it was actually on the list for a short squeeze by the Wall Street Bets guys. And, we will talk about that and if that's even possible to short squeeze silver. But this is on the list, and it's funny because, you're seeing silver outperform gold, which generally we like to see gold move a higher first, and then silver is basically gold on steroids. And then finally, let's talk about Bitcoin. One of our favorite persons that we like to talk about, Elon Musk, this morning changed his Twitter bio to hashtag Bitcoin, and Bitcoin jumped. It was up 12.3%, and it did break back above 34,000. Look at how strong this candle was on that break. And honestly, folks, this is very bullish.
Bullish with a word on the back end of it.
Right, but I mean, just technically, we talked about the double top M pattern. The other reversal is called the double bottom, which is actually not an M, but it's flipped around, and you get a W. And that's essentially what we got here. And if you've been part of our group on the Equity Guru Discord trading room, we've been talking about this important zone here at around 30,000. And you can see here, every time Bitcoin approached 30,000, which is price support, 1, 2, 3, 4, 5 times we have bounced higher. We've seen buyers, so we know there's a wall of buyers here at $30,000, and they are holding it. And this break back above 34K basically confirms this double bottom pattern. So we'll have to watch what's happening, what's going to happen here in Bitcoin. But Bitcoin's actually not the crypto people are talking about. It's our good friend Dogecoin here, the meme coin. And we're going to talk about this, the stock market versus the meme market. But take a look at the price action here on Dogecoin. Same guys, a lot of the Wall Street Bets guy, they're not technically allowed to talk about cryptos, but over on Twitter, a lot of these people now that are interested in markets are basically pumping these meme coins, right, like Dogecoin. So I think this brings up an interesting thing, which of course we're going to talk about. But if people see all these regulations, and we've heard stories now about Robinhood and other brokerages not allowing people to trade certain stocks or closing people's positions, are these retail traders going to be looking at the crypto markets? But as I said that, I did see that Binance and I believe Bittrex, sorry, not Bittrex, but a few other crypto exchanges are now even restricting certain trades in cryptos as well. So we're going to see how that develops. And because the crypto markets are open on the weekends, I think we'll see more of that as we head into the weekend. And before, I guess, we talk about Wall Street Bets, just quickly here, this went under the radar, but there was a Fed rate decision on Wednesday. They didn't really change much. Interest rates remain the same. Asset purchases remain unchanged. However, on that day, on that Wednesday, is when we had this big sell-off here on the equity markets. And a lot of people are thinking that that was a sign from the markets to the central bankers telling them that, hey, look, we want more cheap money. We want more asset purchases. And the Fed didn't please the markets. But I think the most interesting thing that Powell said was that low interest rates is not the cause of this stock market. He didn't use the term bubble, but that's the term that we're going to use. But basically, Powell did say that low interest rates have nothing to do with stock markets hitting these highs and continuing this mania. So, that's a bit crazy, but that's just what I do, I guess. Just a bit. But okay, let's talk about GME, guys. Maddie, you're saying that this is now showing up on all your feeds. It's showing up on a lot of my feeds too. I know a lot of people are talking about this. So what are some things you're hearing?
It's all memes and dumb memes at that. It's not like a lot of great knowledge coming up on my Instagram feed by any means. But yeah, I never see anything to do with finance. Like everyone I know avoids it at all costs, like blinders on. But people are freaking out. Like people I know who are not involved in this world are absolutely losing losing their minds over this.
So just a quick recap. Wall Street Bets, we talked about this last week, but they've been talking about GameStop, BlackBerry, AMC Theaters, Nokia as well, and a few other stocks. So I'll just quickly run through a couple of these charts. Well, you guys know my opinion on BlackBerry, and the reason I'm sort of upset a little bit is because, I love the fundamentals still of the company and the technicals, of course. But if all these people sell, even the fundamentals that come out won't be able to, really get the stock moving if mass amount of people sell. AMC was the other big one that popped up to $20. Again, I think the theaters are still closed in the States. And then, of course, Nokia, which also had a big run, but it has been quite subdued now. But what these guys have been doing have been causing short squeezes, right? So we've seen this with Tesla before, but I guess in Tesla's case, you can say Elon Musk sort of used his Twitter account to, take the shorts out. But what these guys have been doing in Wall Street Bets is they've been looking for companies that have a huge short interest. And this is where we'll go to this site called shortsqueeze.com. If we type in a ticker, let's say GME, GameStop, and you'll see here that they do have 61 million shares short right now. They used to give a percentage here, but I think now, you're going to have to go to Yahoo Finance or whatever, but pretty big amount of shares short. And
I'm just going to talk very quickly here. We've just had a Twitch viewer make a comment saying that the Wall Street Bets ETF, the stuff that they're doing, is going to pump. Is that correct?
Sorry, they have an ETF, or?
I don't know. This is what this person is saying. The WSB ETF.
Oh, it might be, eh? I mean, just maybe for, I see WSB Financial Group.
Maybe saying they should set up an ETF.
Maybe they should, yeah. Maybe they should. I mean, like a lot of people are saying that they are the top funds right now. And, the funny thing is, and this is the guy, I'm not going to say his name, but this is the guy who pretty much started it, right? Deep Bleeping Value. He's the guy that basically started the whole GameStop short a few months ago. And I mean, look at this. What's an exit strategy? But from yesterday, like we've seen again, a lot of these retail guys basically causing this huge short squeeze.
I've got it here, my friend. It's actually a list of their stocks, I'm guessing. There's a fellow here that's posted on Wall Street Bets who gives a list of their ETF, their companies that they invest in.
Basically what we've done is I've got to this screener here, and I went to screener, and I just basically did a very simple float short. Let's say there's a pretty large amount of people shorting, over 30%, and basically this screener, it matches up quite nicely with some of the screeners. Well, look, there's AMC, and I'm sure GameStop's going to be here, but matches up. There's Bed Bath & Beyond. That was another target, but it does match up with a lot of the short lists that are going around with, with the targets that WSB are looking at. So look for these heavy shorted stuff, right? That's what people are doing.
We're being asked from a YouTube viewer, Malik, whether you are holding AMC over the weekend or selling it.
I'm personally not holding AMC. You guys know I'm holding BlackBerry. I have taken half my profits, right? So I've closed 50% of my position because I was, again, looking at the technicals. I really love this break above 18. If you guys remember, I was saying this over the weekend. Okay, this is going to be a nice breakout here. And we did gap up and open around $34. So not something I was expecting, and I took some profits, and I really want to see BlackBerry hold this 18 level. But as I said, right, I really love this company due to the fundamentals and the technicals with the QNX, the autonomous vehicles and stuff. But with this sort of surge of Wall Street Bets targeting this company, I am a bit more careful now because, as I said, if they all do sell off, or let's say maybe I'm not allowed to sell BlackBerry anymore on my personal account because of they attack it the same way they've attacked GameStop, I am a bit more cautious, right? So I did take half my profits. I'm liking this hold above 18. if we do get a close below 18 for this week, then I think I am going to be selling the remainder of my position in BlackBerry next week, although the bullish trend is still there. But as I said, just that momentum from the retail crowd now coming in, it's going to impact the stock quite heavily, right? So, yep.
Just to confirm, that is illegal, right? Like having you not be able to do what you want with the stock that you have purchased for yourself, right?
Yep, pretty much. And you've probably heard that the excuse is that they're trying to keep the markets orderly and protecting the investors. That's what they've been saying. But I think we all know that they are protecting the banks, protecting the hedge funds. And I've been trading for like 8 years, right? So for me, this kind of stuff is normal. Like, we know that Wall Street always wins, right? Even in 2008, when they should have lost, when the bank should have lost, when Wall Street should have lost, it was only Lehman Brothers that was given as a scapegoat, right? But that's the way it works, right? Wall Street always wins. And this kind of stuff's been happening, right? It's just Wall Street actually loves it when new retail traders like this come in, because they love to set traps, right? They know a lot of these people aren't trading. There's a lot of emotions in trading, right?
Well, that's the thing. They're the new rubes. They're the new capital source, right? They're just going to dance around, play the game like they've always played it, but this time they got caught. Yeah. And the problem is it pulls back the curtain on the entire system.
It does,
right?
Yeah.
I mean, it's Vegas, right? The house now has been beat, and now we know how it works, and we can actually do it. So now, in the bigger picture, how the hell does that affect the market for the rest of us? Like, what kind of market is this?
Exactly. Yep, exactly. And, I've used the term, right? It's a managed market now for a while, because we know central banks are in there. It sucks to say this, but I do see regulations coming in. That's going to be the consequences. I know a lot of sort of traders in my group are not trading today because they're sort of pulling back in protest. A lot of them have actually closed all their positions, and there's even talks of them closing their entire accounts just to say, hey, this is garbage. If you guys are going to not allow us to trade, we're not going to.
Well, I mean, it's unfair, right? They're already playing the game, right? It just is different players now doing those moves.
Yeah.
So shutting it down is monopolizing the whole affair.
Yeah. So what got me angry, like personally yesterday, and I'm not going to name names, but I have friends. There's some people even in our group. No, there are some people in our group. I mean, you won't know them anyways, but just in case if they listen.
Just in case, I don't know if this is a friend. The Thinker on YouTube says hello to you specifically. Oh. I don't know if this is a friend.
I don't know if it's him, but
you know this person?
Targeted.
I'm gonna
get you now.
Sorry.
I personally know a lot of like new traders who have never traded, but they jumped onto AMC, they jumped into GameStop, and they were holding like 5 figures worth of profits, right? I mean, putting $5,000 in, turning their account to like 65K, a lot of money, obviously, right? Especially for someone that's doing this for the first time. And guess what happened when they tried to close their positions, because they saw overnight that the market was, at 480 for GameStop and AMC was close to $20. All these brokerages, so not just Robinhood, but there was issues in the morning for tons of brokerages where they just weren't allowed. They were very slow. They weren't allowing you to execute sell orders. And basically what they were doing, and I'm pretty sure you could figure it out, but they were basically allowing Wall Street to get out of their positions or get into positions before the retail crowd.
Well, of course, right?
So we saw this again, in 2008 with the mortgage-backed securities.
Well, damn right. The banks and the ratings agencies just sort of like lied.
So it didn't change the price because all the banks were long on MBSs, right? So what they did was they're like, oh crap, we're stuck, because if the rating agencies bring the prices down, all the stuff that we're holding is pretty much crap. So what they did was, of course, they started to, unload all the MBSs to their customers and other investors, retail guys. Well, I don't think retail guys could have played MBSs back then, but they started unloading them off to the retail guys. And then they started to short the MBSs, from other banks, right? So all together, they somehow colluded, right? They're like, okay, we'll short your MBS, you short our MBS, and then they let the price of MBS actually reflect the reality. So in a way, they didn't hedge their position, but they ensured that they didn't lose, and instead they made the profits, right?
Oh, no, absolutely. Now, I just as an aside here, and because I feel responsible, because the way I phrased it, it came off sounding kind of weird, I suppose. I don't know. The thinker is actually not your friend, but somebody who appreciates you, and they are in India, and they are trying to get a load of the game here, and so they're hanging out, they're watching us, and they're listening to you.
Welcome.
Nice to meet you.
Don't listen to me. Listen to these guys and Madeline. I'll just get angry and say stupid stuff. That's
but not at all.
All right.
But TK, how about you, man? What do you think of all of this?
Oh, this is great. I'm loving all of this. I'm waiting for the textbooks to come out next year in schools for them to tout their efficient market theories.
Yep.
Especially after something like this happens.
Exactly.
Now, sorry, got a quick question. Do you think the hedge funds actually have closed their positions?
Most of them probably have. They've closed out at like $200 a pop. For GME. I don't know about the others.
And this is just me. I'm not saying this is confirmed, but I would bet money that they took shorts yesterday, and that's what the whole thing was about. And most of these, everyone's making fun of Melvin Capital.
Of course, it's going to collapse. Yeah.
Well, people are making fun of Melvin Capital, but if they did get in short, they probably made 3 times their money back.
Yeah,
exactly. That's how it works. That's Wall Street. They won't lose, right? We will lose, but Wall Street won't lose.
True.
That's how it is.
Honestly, it's great. It's a curtain raiser to kind of show. We can call it corruption, manipulation, whatever name you throw at it. It's still a casino. It's in the short run. That's how people will play it, and it just shows you we're at the top of the bull market. People are trying to squeeze as much yield as possible out of anything and everything. And GameStop just happened to be the poster child for it this time. But I honestly believe it could have been any retail outlet that was being heavily shorted. GameStop just seemed to be the one for this one. I'm not sure how it started, but it could have been any retail outlet. It just happened to be GameStop.
Was it because they found out that Citron Research had actually entered a short position on the company and decided they were just going to F them up? That was it?
Yeah. And he's now not publishing any more shorts. I don't think it means you won't short anymore. It just won't publish.
He's not telling us. That's actually a smart move. Like, I suppose in a way it kind of works for him, because if everybody figures they've shorted the company, then oh my God, run for the hills. But now he's got to be careful.
What he says.
Somebody's going to call us bluff.
But honestly, I think they will kind of have to regulate it somehow. I think it's one of the things that's been said since even the MBS is that derivatives are a weapon of mass destruction if they're not like controlled. There's this chart, I just forget the website, where it shows you the nominal value of the entire stock market, how much money is actually in the world, and the amount of derivatives contracts that are out there. And I just forget the numbers, but I think compared to the total amount of public stock market, this is on the globe, there is more derivative value than there is actual market cap. So it's kind of like, okay, they now need to do something about it, because these guys are continuing to create new ways to trade these over-levered instruments.
So the biggest one, I believe, is Deutsche Bank, but just for us Canadians, RBC derivative position, last I checked, was like over 3 trillion. Just to let you know, the Canadian economy is like 1.5 trillion. So
1.5 trillion. That's why I'm like, it's so absurd that
So RBC is terrific, betting on assets twice the size of Canada. Even if the bank falls, the entire economy of Canada, if we sold everything off, we wouldn't be able to bail them out.
That's why I'm like, they're gonna have to regulate somehow. And there's it was CNBC, not the best people to quote, but they were talking about some of the effects of what's gonna happen, and it's true. A lot of the people who are gonna be damaged are most of the people who are not playing the game. Mm-hmm. It's a pensioner who is in their 401k or their RSP is invested in maybe one of the hedge funds or whatever like that. Those people are damaged, and half of them don't even know it's happening right now.
Exactly.
Yeah.
We have a Twitch viewer asking, what are your guys' strategy in trading breakouts price?
Yeah. So I can bring this up. I was going to mention this earlier, but one of the reasons I've survived this long in the game is because I don't trade for a hype, right? We talked about this, the FOMO, the fear of missing out. I survived the whole crypto boom, and I've seen other booms. But basically, when my buddy who's never traded before, doesn't know anything about trading, is telling me that he knows more about trading in the 3 days that he's traded that I've traded for 8 years, and is telling me, his in AMC or that kind of stuff. To me, that's like a frenzy, a mania, and I stay away from that kind of stuff because I just know a lot of the Wall Street sharks are going to be in there because they know all the retail guys are there. They're going to be setting traps and all that kind of stuff. So I play it safe, right? Like I don't chase mania, and we've talked about the fear of missing out. If you feel like you're missing out on a trade, you have missed out, right? And I'm just mentioning this because I've gotten so many messages from people telling me, hey, Vishal, should I be buying GameStop here at 300? What do you think it's going to do tomorrow? What do you think it's going to do in 1 hour? What do you think it's going to do in like a minute? And I'm like, hey, man, like, honestly, you can take a look at a minute chart if you want, but it's not something I'm going to touch because I just don't chase this kind of stuff. What I look at and the type of patterns I look at, definitely, join our Discord chat. But I look for simple structures, right? I look for simple market structures, basically reversal patterns. So, for example, the Dow Jones, this would have been a short. It is pretty much a short for us because it gave us our double top pattern. We have that breakout, and now we're seeing that continuation. The trade that I took this weekend was actually, this week, was actually the US Canadian dollar. As you can see, very similar setup. I look for a prolonged trend. I look for signs of exhaustion because, as we know, price does not move in a straight line, right? Nothing moves down forever. Nothing moves up forever. There is eventually a reversal, and these happen at important support and resistance levels, what I call flip zones, usually, an area that's been support and resistance, as I said. And you see wicks, right? You see a lot of ranging because you're not seeing price move down anymore. You're seeing, as I said, price exhaustion. And this was a trade that I took earlier. Made some nice profits off of this. We have pulled back to retest, but as you can see, we're not breaking back or closing back below the breakout zone. So, I just look for patterns that look like this, and we've covered even juniors. We've talked about Manganese X, had the same, very similar pattern like this. Something I missed out on, but we were looking at this as well, was McEwen Mining, downtrend, range, showing exhaustion, and then we had that breakout. Trip. So again, this can work for anything, right? Not just stocks, but Trip, we had our pattern here as well. I guess even a little mini cup and handle, and this is something we rode from 12 cents and likely to continue higher. There is, by the way, if people are interested in the psychedelics, there is Canada's or the world's very first psychedelic ETF that was released on the Canadian markets just 2 days ago. Not doing so well right now, but we've only had 3 days worth of price action. So if anyone's interested in psychedelics, this is the ETF that you might be looking into. But yeah, basically, sorry, just to go back quickly to the patterns. I just look for patterns. I'm very patient. I don't day trade, although you can use my strategy in the markets. As you can see here in the 5-minute chart, you do have a reversal pattern here, what we would call a cup and handle. But I just find that the lower the time frame, the less strong the signals are, right? So I prefer the daily and the 4-hour charts because that will tell you the overall trend. And currently, It's not looking too good on the S&P. So if you are going long on the 5-minute chart, you're technically taking that risk to play a counter trend on the shorter time frame. And as you can see, it looks like we might roll over here. But if you are interested again in our strategy, definitely, or my strategy, take a look at my work on the Equity Guru website, and definitely join us over here on the Equity Guru Discord channel, where I will be posting charts. And as you can see, a lot of them are very similar looking to each other, because we just look for the same patterns, and we just rinse and repeat. And I think that's what good trading is, right? It's having a strategy, sticking to it, having rules. I mean, you can't really see it here, but I do have a checklist of things. Maybe I can tape it off. But I do have a checklist of things here that I look for before I take a trade, and I take a look at this and make sure I hit everything before I enter the position and exit a position. So it's just following rules. You don't really want to keep changing your strategy all the time, because it just adds too much emotion to things. So stick with the strategy and see it through pretty much. That's
Great. We do have another question from the Thinker. They asked, I thought Melvin Capital would go bankrupt. Isn't that going to happen?
Probably not.
Probably not.
I think people forget they have other positions. They're just not all in. Gamestop. Although it will be a big hit, they'll probably have a bad year. Most of these long short funds will do well, because of the bull market in general. They only take short positions because they want to beat their peers, because everybody's kind of making the same return right now. Fund wise, individual investors are beating the fund guys because of capital limits and stuff like that they can't do. But yeah, they're still going to be there next year, and unless like something dramatic happens, that they were over levered, they took on too much debt to put into the positions. And then there's one great example is long-term management.
Yep.
What? Did I say that right?
Long-term capital management.
Long-term capital management. One of the funds that went bust because of it wasn't a short though. I think they were trading. Yeah. And they went bankrupt, but that's because they took on a lot of debt to do it. I don't know if it's the same situation with Melvin Capital.
Yeah, I think these guys, they were betting on, they had a lot of assets on the whole Russian economy at the time. And I love this, because long-term capital management had Nobel Prize winning economists and renowned Wall Street traders, right, on that team, and they still lost and had to get
lost everything. It's the best example of the market doesn't care about your IQ. It just wants someone with temperament, that patience that Vishal was talking about earlier.
So for me, what I'm finding interesting now is, after yesterday, a lot of the guys now on Wall Street bets, and just on Twitter in general, a lot of people are now saying that this is not for the profits, that they're buying GME and all this stuff, that they're willing to lose money because they're trying to make a point now. They're
no, exactly. But I mean, they would never have made money off of this. There was never any money to be made off of this. This was a short. GameStop, as far as I can see, is blockbuster.
Yeah, basically. I believe, some people are probably doing it. But here's my theory. A lot of the people are saying they don't care about the losses bought in at $15, $20. So even if it goes down another 20%, 30%, 40%, they're still millionaires, a lot of them. So they're holding the price pretty steady right now. It's when those big guys, the whales, move their chips off the table. And some people are speculating that there's a lot of institutional money doing the same thing that rode those coattails of the retail investors. Exactly. So it's when those people move out that's when people will be like, oh yeah, you know what? The movement was great, but my life savings are dwindling every 30 seconds. That's the big test, I think, for a bubble like this.
I might say this might be a bit controversial, but this was a discussion we had a few days ago, actually, over on our Equity Guru Discord channel. But a lot of the members, right, they actually think that this pop is not actually the retail traders, because retail traders wouldn't have this much power to actually cause prices to spike like this, and the capital. A lot of people think that, hey, Wall Street is taking a ride, right? They see that this is pumping, and they're like, hey, why not? Let's just take the ride, and we'll blame it on the retail guys. But they're the ones that have the power to, do something like this. And again, I'm sort of, okay, I'm just sitting on the sidelines, but I know a lot of people on our Discord channel are like, yeah, this is not the retail guys. This is sort of just setting up for regulations on the retail guys, but this is really the institutionals that are squeezing their own buddies. But maybe they're, with all the stuff that's happening, all these hedge funds got into short positions right here at the top yesterday, which is why certain platforms weren't allowing you to take shorts or take, to exit your positions. They were letting Wall Street position and make that money. But again, it's very controversial, but a lot of people think that that's what's happening, and they say that retail guys don't actually have that type of clout.
Yeah, I don't think.
So you don't think collectively, with the small amounts that they do have, and yes, you're right, that's basically the case, that they don't have enough actual buying clout to drive stock price like that.
No, it's a $1 billion stock. It's impossible for that kind of buying pressure to come from 5 million people contributing close to at least $1,000 each.
In that respect, can they actually leverage the stock that they have already to purchase more?
They could leverage.
Yeah, I've seen some people saying
if that is then indeed the case, then perhaps they can, because if you're talking about a compounded exponential type of effect, if they're allowed to leverage their own stocks, then wouldn't that actually provide the oomph necessary?
They were before, but then the brokers put a limit by increasing borrowing rates and stuff like that to kind of stop people from
I think
taking
it was
on
like
extra.
Something ridiculous too, wasn't it? Like 120 or 100, like
yeah,
100%.
Okay,
yeah, just to deter people from holding positions overnight and stuff like that. So it was really that I was actually going to ask now. Outside of the technical side of what's going on behind the scenes, we obviously know the capital market system is not supposed to be efficient. It's not supposed to be perfect as well. I don't know why a lot of people want it to be perfect. But it brings into question, after something like this, who should, where if you were the attorney going into this, who's the plaintiff, who's the defendant? What is the best case scenario for people, for the system to come out better next year, and so situations like this don't happen? Do you, go to the hedge funds and tell them you can't short anymore?
Exactly.
That removes a lot of price discovery.
Yeah.
Some of those shorts do help. Some price discovery. They reduce some of these bubbles. Do you go and you say, okay, retail guys, you can't buy long-term options that are, deep in the money or something? Like, how do you, as a regulator right now, how do you look at this and you're like, who is to blame here when both sides are making money? However, they're making money. Who do you blame here?
Well, I mean, I guess the only thing is that, yes, it immediately exposes, as I said before, and I'll be a broken record on this, what kind of a game it is. And it's going to casino, the house always wins. And the houses are the hedge funds. And it's not us, right? So now that we've discovered that the game isn't really a game, I guess the game is gaming us, right? That's the game. Right now, we've discovered that we can do the same. I guess everybody just does it because we've never prevented it before. We've always just turned a blind eye to it. We've always just went, "Whoa, that's a great performing stock." You know what I mean?
And people move on. True.
Yeah. Right.
Yeah.
Hey.
Yeah. So is that if it's the new normal? I mean, for me as a retail investor, I already knew the game was rigged, but this just sort of like kicks you right in the groin.
True.
It's like rubbing salt right in the wound, right? Going,
That's
yeah,
true.
we know the game's rigged, but here you go.
It's extremely rigged. That's true. I'm actually going to be on the side of the institutions here.
So do we eliminate the power of the institutional investor to a certain extent to provide, let's say, short positions and that kind of stuff, but leave the retail investor, who is infinitely less powerful in regards to capital, that ability? That might be the great limiter. Does that make sense?
Yeah, true. I think a lot of what they're going to do is going to be transparency. So I think before, hedge funds didn't have to show their short positions on their filings, public filings. They had to disclose puts. So a lot of them do naked shorts instead. Some do covered as well, but like a lot of them don't have to disclose that they're short, and that's it's an advantage for them. So I think that's one of the things they're going to be like, okay, now if you want to continue to short and you say it's good for the markets, you have to disclose that in your public filings every quarter, that these are your short positions. But that takes away the competitive advantage for the funds as well. And now a lot of people will be coattailing on these shorts, and the same thing that happened in the bubble going up can happen going down because people are now shorting the same stocks with the same derivatives that cause the same thing on the opposite end. So it's like nobody really wins in this situation. It's kind of what Galen is saying. We're gonna have to go back and be like, whoop, let's just forget everything that happened there and just continue like all is normal.
Exactly. I didn't see anything.
Exactly. Turn a blind eye again.
So I think I got like two comments. I think first of all, like I just want to say I know short sellers get like a bad rep, right? But I think they're the only guys that actually look for fraud, right? SEC is too busy either watching adult movies or getting paychecks, right? They don't really do anything anymore. The actual regulators. So it really is just the short sellers that are really finding real frauds, right? And calling them out. So I do respect short sellers in that opinion, although they get a really bad, rep, right?
When they create the catastrophe, that's the problem.
Yeah.
When they see it and they identify it and they act like a surgeon and remove it from the market, that's not a problem.
Yeah.
I mean, to a certain extent. I mean, it's unfortunate because these are really these are large operations. A lot of money's being made back and forth. I guess how can you between them? I don't know.
True. Joe, I think the most ironic and hilarious thing that's happened so far is I was butcher his name, Michael Burry, Dr. Burry. He was long, probably sold some of his stake now. He bought it at I think an average of $5.
Yeah.
But he came out saying, what the brokers are doing, is pretty terrible. And he's a short seller himself, right? So it's interesting to know, and he's taken one of the biggest shorts publicly on Tesla as well.
Yep.
So it's like, he can say, this is terrible. These, something needs to be done about this. You can't short a stock above its public float, but he's also part of the game. But he's part of I think the people who try to take away the fraud. Like what Michelle is saying, is like, hey,
I mean, he's making money on the backside, but the end result of his administrations. Well, I don't know, because they don't really impact the situation. They just read it and go like, I'm going to make fucking money off of this.
Yeah, exactly.
Sorry. What's the language? Anyway, yeah.
We talked about this last week. We talked about the unrealized capital gains tax. And I think, that's pretty much 100% go. That's going to be coming for two reasons, right? This might be a way to deter people from holding or investing, in positions, but remember what we talked about, right? The biggest issue right now to getting the economy to recover is getting people to spend money, right? That money velocity. What we've seen is that when things are bad, people don't tend to spend as much, or when rates are negative, they tend to save money. And the goal right now for the central banks is, okay, we're giving people stimulus checks. This might evolve to, MMT or universal basic income going in the future. But how can we get people to use that cash that we provide them to spend in the real economy rather than investing, right? So an unrealized capital gain tax is sort of a way, you know, to punish people that will decide to invest rather than spend money on.
Well, no, absolutely, but that in and of
right?
itself, that will trigger a huge amount
Yeah.
of inflation, because the invented money that we've already had, that's been stuffed into the market, will now be coming back out and actually going into the economy.
Exactly.
Right?
True.
Yep.
And
Yep.
that's now
Yeah.
we're going to experience the inflation that we never saw before. Well, we
And
did.
money
We
will-
saw it. We saw it in Tesla stock. That's where we saw it.
True. Yeah, but I think the long-term effects of this are pretty intense.
It will be. Yeah.
We've gone close to most of the market's history only knowing long-term gains are taxed more favorably than short-term capital gains taxes, and now they want to tax you on unrealized capital gains. I think that's pretty crazy. As well, I might be biased because a lot of my positions. I love the free loan from the Treasury or the CRA this side. It's amazing. I don't have to pay taxes on anything. That is, but it's like,
yeah.
Oh yeah, it's. I think it will have a long-term effect that we might not be able to appreciate, and that just might mean lower stock returns.
Yeah.
In the long term, but short term, anything can. It will cause people to speculate more than actually put money down in the long term, because you want to take that money out as quickly as possible if you're getting taxed the same
how is this
way.
how is this then? Oh, I apologize, Taku. Continue. Finish. Go ahead.
No, that's it. Yeah, it's just it'll force people to speculate more because the tax is the same. The economic cost is the same for you. I might as well gamble with it.
How is this impacting people like you, Maddie, who is sort of getting into the investing world and such? This news, one, that they pulled back the curtain and went, "Here's the wizard," and the other one is the unrealized capital gains tax and stuff. Things like this, because obviously, I mean, it's just at this point something they're thinking about in the States. But if it works, obviously, other central banks or other governments are going to start to look to this as an avenue of revenue. So where does this put you? Are you as happy as an investor?
That's so funny, because I was actually just going to ask you guys, because I'm someone, a new investor, also speaking to new investors. Like, I'm not really sure what this means, and I'm trying to, inspire people to take control of their finances and invest in, things they care about, make more, all this stuff. But this isn't promising. Like, it just feels so manipulated, and like, if you're not a millionaire, you're going to get screwed over no matter what. Like, yeah, but I'm asking the same question. Like, what does this mean? Because I'm kind of just confused by it. Like, or what would you recommend that new investors do or steer clear of?
I have some very strong opinions about it, but
I do too.
I say you can invest. You can invest in whatever way you want, but I would say stay away from still, even though it seems to be the way the market works. Stay away from these huge run-ups.
Yeah.
I mean, unless you're prescient and you've somehow managed the perfection of, or the art of timing, it's just going to screw you in the end. So find value. Just keep looking for the value.
And like we talked about this too, like companies that are going to be around here 10 years. So instead of the growth, maybe look at some of the value, as you just mentioned. So like Fortis BC, it's not sexy, I know, but they, Loblaws, food, people are always going to be buying groceries. TK is really big into the banks, right? Bank of Nova Scotia, pay like $1.90 dividend or whatever, right? So these dividend paying stocks that are definitely going to be around here.
I'll say it again, United Rentals. I've done nothing but good with these guys.
Yeah, and you're not going to be making these sexy 1,500% returns, and I think that's the issue. A lot of new traders, when they look at social media and stuff, they think that this trading stuff is this get rich in 1 day or 2 days type thingy. But as I mentioned, right, a lot of these top Wall Street hedge fund guys, they bring in maybe 18 to 20% a year, right? Like the average guys, and they get paid millions of dollars for that return, which is, only 2 or 3% per month, which, it's funny because as a trader, you're seeing people say, oh, you have to get 300, 400, 500% a month, right?
True.
But these people who can do that consistently, who can bring in 18 to 20% a year, they make big bucks salary wise, like millions of dollars, because they can do that consistently, right? So
That's so
I think,
true.
take a look at that, right? Because I think all these images and the whole idea of what a trader is, it's you have to be consistent, which does require patience and stuff.
Patience,
because a lot of people who do chase these 1,500% moves and stuff, not very many of them survive, for very long, right?
On the downside correction. That's true.
Exactly, right? And going back to the unrealized tax thing, we know that all the money spending that's being used to combat COVID and stuff, we know taxes have to go up, right? It's just a no-brainer thing.
It's inevitable.
It's inevitable, right? I always thought it's going to be in the green taxes side. I still think it's going to be the green taxes side because that's sort of the best way to get money from the people.
Sure.
But unrealized tax, capital gains, I think, is going to be there. I do think there's even going to be a kilometer-driven tax eventually. So they're going to tax you for everything, right?
True.
I just want to give an example here of the Japanese stock market. So Japan also had unrealized capital gains, and they still, technically do. And they went to a whole different level, right? So their unrealized capital gains was not just for the stock market, but they had a real estate bubble that was going out of, it was crazy, right? The Emperor's Land in Tokyo. So the Emperor's Land in Tokyo was worth more than the entire state of California, right? Like that's how crazy the real estate bubble was in Japan. And what Japan decided to do is to bring down the prices of real estate to make it affordable for people. They said, hey, why don't we put unrealized capital gains taxes on real estate? So not only were you paying a property tax, but you're also paying the unrealized gains on real estate. So, I mean, for people living in Vancouver, Toronto, that's like, really horror, scary stuff, right? Because now
you're holding all this $1 million property that you have to sell.
And what happened in Japan was people sold their real estate because they're like, okay, government really doesn't want us to hold real estate because we have to pay all these taxes. And in that 30 years from then, that's why Japan basically became pretty much a renter nation, right? A lot of people there are renting because it's so tough to hold real estate when, first of all, the prices are deflating all the time, right? So you're not really making any equity on your home. Why buy a house if it's going to be cheaper next year and the year after? And it's been like that for 30 years plus. And we're seeing the same in Europe now too, right? Europe is following sort of the same ideas. They have like a VAT tax, the value added, so it's calculated a bit differently. But let's just hope that this kind of stuff doesn't come to real estate. But I have a feeling government will do it because they know there's a lot of money there that they can tax.
Tax, that's so true. I actually want to kind of touch on the tax thing and Maddie's question about, what to do from now on. And there's a great, I do roast the academics a lot, but some of their studies are pretty interesting. They did a study from 1930 to 2012, I think, a time range like that. And they pinned investors against the indexes. And a lot of people were questioning, oh, why, match yourself with the index? It's easy to beat. Everybody can beat that. But they were trying to show that the index is not a pushover. It's pretty difficult to beat after taxes. And it was 3 groups they did. They did trust accounts, which, to be morbid, it's more dead people. And they did women's accounts and males' accounts. Over that period, the males came in last, the females came in second, and the dead accounts came in first. Dead accounts. the trust accounts came in first. So it kind of showed over a long period of time, inaction was better than action. And a lot of the action comes from a large male cohort that believes they're better than the market. They didn't beat the market by a few percentage points, but they compound over time. And the females did better by 2% compared to compared to the males. And it just kind of shows you that, it's the game. It can be rigged over time in the short run.
Yeah.
But there's a lot of mechanics behind it that allow you to create value if you continue to stick with your tried and tested system, whichever that system might be. This was just a showcase that it's difficult to beat an index after taxes. And I say, bringing it to today, now they want to tax you more. What is that going to do for the male cohort, the female cohort, and the trust will probably still do well over time, but like, what will it do? What will it do for the two active players in the market? That's the big question now. Are we going to head to a time where we're going to have low returns in 10-year periods of 4% because everybody's selling and there's no price action because people are just consuming, but there's no inflation, so people are trying to find different ways to do it. They move their money outside. It's just there's like so many big questions to it. It's like it's kind of scary to think about. Yeah, exactly.
The world. And that's what a lot of people have been saying, right? That we are going to the way, like, towards Japan, which of course, the economy is still alive, but stagflation. Not many people own assets. Things are still expensive there, right? But
True.
Is that the model, right? Are we going to the Japanification? It certainly looks like Europe's going that way. But maybe North America is going to be next. And that's, I guess, would be, some people would say, the best case scenario.
I like that statistic. TK, I'm for my next article. I'm totally feeling it from you.
No worries.
I think that is all the time we have today because we're coming up on the hour, so we won't keep all of you who are still watching. But thank you so much for tuning in, and we will see you next week.
Bye.
Take care, everyone.
Bye.